Judging by the dropping stock prices, it's no surprise that investors have been worried about Tesla's Q1 earnings meeting expectations. With the end of the first quarter coming up, we thought we'd take a look at what's been happening. Coming from a high in Q4 of 2021, the earnings call announced that the company would be scaling back on some of its more ambitious goals, especially with a shortage in supply of manufacturing materials. However, we believe against all odds, Tesla's Q1 earnings will shock the market in a good way. Information from analysts says 2022 Q1 earnings might even surpass 2021 Q4 earnings with the state of the economy, industry, and recent events. How is this possible, and on what grounds? Keep watching to find out. This year, Tesla announced 2021 fourth quarter numbers that were far better than expected. After the automaker warned that the supply chain concerns would persist through 2022, shares plummeted but have eventually recovered to slightly positive territory. The company reported earnings far above analysts' estimates. Earnings per share adjusted for inflation had increased by 217.5% year after year, and revenue had increased by 64.9% as well, beating analysts' expectations. A more thorough look at the numbers show that the earnings were at $2.52 per share compared to analysts' expectations of $2.36 per share, according to Refinitiv. Refinitiv also stated that revenue was $17.72 billion compared to $16.57 billion projected by analysts. According to the statement, revenue increased 65% year after year in the quarter, with automotive revenue totaling $15.97 billion, up 71%. For people familiar with Tesla's history of growth by leaps and bounds, this should come as no surprise, but the 2021 Q4 earnings report is impressive by any standard. Things have not been going great this year though, from hiccups that cut across the electric vehicle industry as a whole to the stock market punishing growth stocks. When you factor in the chip shortage crisis, inflation, and investors selling off their shares out of fear of dropping prices, it's been an interesting quarter so far, and there's definitely more to come. A lot of investors strongly believe Tesla will fall short of expectations in Q1 of 2022. A recap and comparison of 2021 Q4 and 2022 Q1 reveals this might not be the case though. In the fourth quarter of 2021, analysts predicted the firm to report $16.35 billion in total revenue and $2.26 in adjusted per-share profit. In terms of revenue and profit, Tesla surpassed expectations. When taken as a whole, Tesla's year was a success even though revenue from energy generation and storage was $688 million, down 8% from the previous year and less than the street account average of $815.1 million. It was the division's lowest revenue since the first quarter of 2021. Tesla's main business is creating automobiles, and the company wants to keep increasing production to increase revenue and profits. Why didn't Tesla stock move up after this announcement? The company's stock kept going down even after it revealed that things were going well. The results appear to have mostly met expectations, implying that they were already factored into the company's stock price. In a shareholder deck, the business stated, "Our plants have been working below capacity for several quarters as supply chain became the key limiting factor, which is likely to remain until 2022. Elon Musk, Tesla's CEO, indicated on the firm's earnings call that the company expects to remain chip limited in 2022, and that as a result, the company will not debut any new vehicle models this year. This year, we will not be introducing any new vehicle models. We'll still be confined in some ways. Instead, he said the business would focus on engineering and tooling for future vehicles. In addition, the CEO stated, contrary to what he stated in the Tesla Battery Day presentation in 2020, the business is not currently working on a $25,000 compact electric vehicle. Given that these conditions were already present in Q4, this news wasn't too jarring. It might have affected market sentiment, but production continued and now the company has a game plan. They will be more focused on what works, ramping up production and working on bettering existing technology. We think it's safe to say that growth is unavoidable, especially profit-wise. Trip Chowdhury of Global Equities Research recently did his usual Tesla plant research, and he's very optimistic about the electric automaker's prospects for production, shipping, and deliveries in Q1 2022. Tesla's momentum, according to Chowdhury, is very robust for the quarter. He also stated that he expected Tesla's Q1 2022 figures to be higher than that reported back in Q4 2021, which would likely come as a shock to many invested in the stock market. For those who aren't aware, Tesla traditionally has better quarters as the year progresses, with fourth quarters serving as the final push. This means that when Q1 deliveries are published each year and they're significantly lower than the fourth quarter, there's usually chatter about Tesla's vehicle demand plummeting. Tesla's efforts in Q1 2022 haven't gone unnoticed by Chaudhry. We've already learned that Chinese production and delivery are expected to be exceptional. While Musk acknowledged that the worldwide chip scarcity remains a source of concern, Tesla is still forecasting a 50% year-over-year increase in deliveries. According to Chaudhry, Tesla Model S Plaid deliveries appear to be up approximately 15% because the vehicle is a $130,000 all-electric car, has strong margins, and should help Tesla's finances in the first quarter. In light of this, the global equities research analyst restated his $1,500 price objective for Tesla, as well as his overweight rating. Almost as if to prove Chaudhry's stance, Tesla's stock soared in early trade on the 28th of February, and there's some speculation on why this occurred. Some say this is due to its car battery partner Panasonic revealing that it will construct Tesla's new 4680 lithium-ion batteries at a manufacturing plant in Japan, possibly within a year. The Tesla 4680 is a new type of lithium-ion battery that was initially shown at the Tesla Battery Day event in 2020. According to Reuters, the new battery will be nearly 5 times larger than Tesla's current battery cells, with a diameter of 46 millimeters and a height of 80 millimeters. The new battery, at capacity, will be able to carry substantially more energy while simultaneously providing better range to Tesla vehicles and at a reduced cost of production. This, of course, spells higher growth rates for the company. However, Panasonic will first require a plant capable of producing the device. Panasonic's Wakayama factory in western Japan, according to Reuters, has to install 2 new manufacturing lines before it can begin production. Unfortunately, production will not begin until the fiscal year ending in March 2024. This new battery will arrive sooner or later, extending Tesla's technological advantage over competing electric car makers even more. Another take is the current Russia and Ukraine situation. Many analysts believe that as the West cuts ties with energy-rich Russia, the stock of Tesla will rise. Tesla stocks seem to rise as traders bet that tougher penalties against Russia will push the world towards clean energy and electric vehicle stocks. Other electric vehicle stocks such as NIO and Rivian are also going up. However, markets appear to have overestimated the possible severity of Russian penalties. Western countries might be willing to cut connections with Russia, particularly those in the energy sector, which might act as a long-term bullish trigger for the electric car category. In the near future, the stock's performance will be heavily influenced by the overall market mood as well as the outcome of the present Ukraine issue. Additional energy-related penalties against Russia might be a favorable factor for Tesla shares. Meanwhile, some analysts' earning forecasts for Tesla Q1 continue to rise. Tesla stock is currently priced at an 83 forward price-earnings ratio, with earnings estimated to be $10.48 per share in 2022. Tesla stock has been under pressure as investors have shied away from riskier assets, but recent changes may deliver strong-term benefits for electric vehicle firms. It should be mentioned that throughout the previous days of the developing crisis, the main tech stocks have largely received support as traders saw them as safe haven assets. If the market continues to fall, this element may provide more support for Tesla shares. Recent reports from the Fremont factory and the Gigafactory Shanghai both suggest that Tesla's Q1 2022 performance will be remarkable. Aside from Chaudhry's latest factory inspections, footage from Shanghai obtained last month suggests that Tesla China is pushing hard on the Model 3 and Model Y exports. During Tesla's recent Q4 2021 and full-year earnings conference call, it was also mentioned that the 50% increase could be achieved with just 2 factories currently operational, Fremont and Shanghai, which is the current situation in the first quarter. This shows that despite all the bad news and turbulence, especially compared to 2021 Q4, almost nothing is stopping the brand from turning a good profit now. Tesla is still set to establish 2 new plants in the near future, which should considerably boost production and delivery figures. Following his tour to the facility, Chaudhry maintained his overweight rating on Tesla with a $1,500 price target. This is a positive indicator as it implies that the manufacturer's development pace is on track. Chaudhry's conclusions from such checks frequently mirror the true situation and are a reliable predictor of investors' projections. Hence, we strongly believe that Tesla's 2022 Q1 earnings will be right on track with the company's goals, and investors have nothing to worry about. Do you think Tesla will meet up to their Q1 earning goals? What do you think made the Tesla stock price start increasing again? Comment down below.